What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 23rd of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I need to have a very serious one-on-one conversation with you guys. I really want to level with you all that for the first time in a while, I'm feeling that something pretty substantial is happening in the macro sphere. And not only do I want to spend some time to analyze Bitcoin and discuss my thoughts on the crypto market here with the last few days of relative strength, but I also want to spend some time broadly speaking to talk about the macro perspective and how crypto is going to fare in this world where there are a lot of warning signals in the bond market, a lot of warning signals in equities, in global volatility, and with what's going on in the macro world between trade relations, global conflicts between nation states, a whole range of things going on that are leaving me feeling very uncertain here about the next year-long outlook for equities and assets as a whole. We've got a lot to unpack here, so if you guys happen to enjoy, consider dropping a like. Let's go ahead and kick things off. So I want to spend some time, as always, to talk about what I know is most important to you guys, what's going on in the crypto market. But I ask that you please stay around for the macro perspective later on. Essentially speaking, Bitcoin has continued to garner strength here over the past few weeks since its strength it built up back here in mid-September, the same range it was back in June of 2023. We've essentially been ping-ponging between this price range since March, finding support at around 25K, coming up towards 31K, and repeating the process time and time again. And now we have a third opportunity for Bitcoin to potentially clear through this range here. The question remains whether or not it's actually going to be able to clear through there. Do we really have this massive buy-side potential that's coming in? It is important to note here that it took us longer than any of the two prior attempts to get from this range to where we are now, especially when we consider the difference between back in June. But I want to go ahead and again look beyond price here. The only way we can start to gauge this is not looking at some hopeful prediction models of whether or not a Bitcoin ETF is going to get approved. We need to look at what the market itself is telling us through various different types of charts and ratios. And I try to look across the board when I do this analysis here, guys. The first thing I like to look at is altcoin markets. Are altcoin markets following through? Now, it is fair to state here that altcoins are usually, throughout history, at least according with what we have with our data, are going to do better later on in a bull market. They're not going to shine very early on. But I do like to look at it and see whether or not we're seeing hopeful signs that might signal that, hey, altcoins are also seeing the idea, or altcoin markets more specifically, are seeing that there may be the potential optimism, euphoria, and liquidity to come to the sector, potentially give some price appreciation. However, we are not seeing that yet here. We're seeing the same resistance from back in August and October coming to play here in late October, holding down altcoin market cap below $550 billion. Well below the prior relative high back here in July when we had the XRP victory against the SEC in so many people's eyes. Many people said that was an altcoin paradigm shift. It was going to change everything and kick off a new bull market. Well, we are far and few away from that prior valuation. Not to mention, that alone was also a much lower level than where we were, about $40 billion less than the relative highs back in April. So we are not seeing confidence here in the altcoin space right now. And more importantly, I don't want to just bash on the fact that altcoins are setting in lower highs. That's not enough for me to be concerned. What I am concerned about here is that we are finally approaching a lot of the long-term lines of support for altcoins against Bitcoin. And while altcoins may continue to not per se perform or outperform Bitcoin during the initial waves of this potential bull market that people are talking about, the problem I see is whether or not altcoins are going to even be able to hold this line of support here. If they can't, if they break through some of these significant lines, like the ETH to BTC ratio, which has a line that has been held since all the way back in December of 2016, over 6 years coming up on here in December. If it cannot do this, if it breaks through this line, we are in for some serious trouble here. Excuse me, over 7 years. My apologies. My math was wrong there. 7 years of a support line. That's showing some serious risk-off sentiment about the continued expectations for growth and acceleration of Ethereum as the second largest cryptocurrency. What about BNB here, right? BNB, right? Some people might argue that Ethereum is a more speculative play here, and it's only going to do well when the altcoins do well. But what about BNB, which is itself not only tied towards the Binance Smart Chain as a speculative play, but also has its utility function to reduce trading fees on the Binance exchange and all of its other affiliates? Well, here's the problem. Binance is coming very close, as we've talked about for the past few months, about testing a line of support it has held since back in December 2017. over 6 years here coming up in this December. If that breaks, what does that tell us about the risk-on sentiment of crypto as a whole? It doesn't tell us a lot of good. XRP, which supposedly, again, won against the SEC, we were one of the few channels that said this was a nothing burger here for XRP's long-term acceleration. And what do you know? Week by week, this has been a losing trade to be long for those who were bullish on the news. A lot of people lost a ton of money here buying into the FOMO. And now we can see that XRP is looking like it has broken past its line of relative support since back in March, and on the long term, looks like it's ready to visit much lower levels here on its long-term ratio against Bitcoin. This is not a good look here for the long term. But the thing here that a lot of people might say is, Nick, this is the altcoin market. Where else can we look for signs here for risk taking? Maybe we're seeing it in the equities markets. Well, it's a great question. Essentially, I like to focus in more importantly on ratios and the things that are more directly correlated with Bitcoin, because many people believe that Bitcoin is going to be the star of this next bull market, that there won't maybe be an altcoin cycle, if any at all. And on top of that as well, that Bitcoin is going to shine. It's going to be this global asymmetric asset that people pull money into and is going to accelerate higher. And to be honest with you guys, as much as you might think that I'm a bear on the market, some of you may think that I have no optimism for crypto, that I've completely ditched crypto, which is not true. I love this space. I love crypto, and I would love to see a Bitcoin ETF get approved. I might feel that that is the right thing to do, that there should be an ETF, but my hopes and our hopes collectively as an industry are not what are going to happen all the time. And I care much more about, rather than following my hopes and dreams, following what the market is telling me. There are some very scary trends here going on in some of the ratios for leading crypto stocks out there in US markets today. I'll give you guys a great example here. MicroStrategy, which is the closest equity trade that you can make towards directly investing in Bitcoin. All right? At the end of the day, MicroStrategy has monetized its revenues and essentially has put aside all of its other business operations as a part of its speculative value in its company, and essentially monetized those revenues, borrowed a lot of money, and bought Bitcoin. And anytime it dilutes shares, like maybe another traditional company do, it's doing so in order to go out and buy more Bitcoin. So it's basically a pseudo Bitcoin ETF at the end of the day, right? And essentially we can see that when Bitcoin accelerated back here in June through July, which had a lot of optimism for a Bitcoin ETF, we saw MicroStrategy outpace Bitcoin by a whopping 50% during that period of time. When Bitcoin made a 20% price acceleration, MicroStrategy went upwards of near 70% in its price appreciation. Wow, talk about a substantial move here, right? So we can see here that MicroStrategy was able to outpace Bitcoin during that period of time. And as Bitcoin has been reeling back up here towards this resistance range, what has MicroStrategy done? It has essentially gotten outpaced by Bitcoin by 27%. But to put this in other terms here, to dive over to the chart, MicroStrategy has done nothing. It's gone sideways since back in August and September. Why is that here, right? If there is such a guarantee of an ETF coming up, if the predicted probability markets out there by many market analysts are saying that a Bitcoin ETF is destined to happen here in the next few months, and that there's this huge wave of institutional demand for said ETF, wouldn't we see people front running into the early stage opportunities in the market for that ETF? Certainly plays like MicroStrategy. We're not seeing it. But let's take a look at another broad play here. Let's take a look at the ratio for Coinbase. Coinbase during that period of time did even better than MicroStrategy versus Bitcoin. And back during the summer between June and July, when when Bitcoin was making that acceleration, we saw Coinbase go up nearly a whopping 100% against Bitcoin. A huge amount of price appreciation in just a couple of weeks. Now, what has happened since then? While Bitcoin has continued to move higher, Coinbase has lost out 34%. To put it in perspective, it's not only given up its gains from back in the summer, a huge chunk of it here, but on top of that, it's just sat sideways here. It's done nothing. I may sound like I'm being hard here, and some people will say, some may say, Coinbase, Nick, is an exchange. It has expenses. It's completely different from investing in Bitcoin. Well, the thing is that Coinbase is a great indicator of trading volume, of expected speculation in the market, of participants coming back in. We would certainly expect that Coinbase would move higher here if we're expecting a huge rally around Bitcoin. But we're not seeing it here. Now, what gives here, right? I want you guys to take a look at what may be the most important chart of these three. Because the whole narrative of a potential bull market is based around BlackRock getting its ETF approved. Take a look here at BlackRock's share price. This was the summer where we got the Bitcoin ETF announcement. This was the period of time here, back in June, where BlackRock had made that announcement. Optimism started to set in. A lot of people felt it was a new paradigm shift. And not to mention, BlackRock was coming to test up against a very important line of prior resistance, which could have been a make or break moment here for BlackRock. And unfortunately, bulls didn't show up to the plate. We had our weakest response. We didn't even really come up and test towards some of these higher levels. And instead, since then, we've gone from $750 a share down to $600 for a company like BlackRock that is tens of billions of dollars it has given up in its market cap. Does BlackRock's share price signal to you that a Bitcoin ETF is absolutely guaranteed? A supposed new multi-billion-dollar revenue stream that could be opened up for BlackRock because it supposedly just has, with a stroke of a pen, the ability to subvert the SEC and to approving its ETF. Does this signal to you that there's some huge, massive institutional wave of demand for Bitcoin? I don't see it. BlackRock is bleeding while Bitcoin is going down. And we've even been fair enough here in this channel to take a look at the BlackRock to XLF ratio, which divides it by the broader financial sector, and it has underperformed its banking counterparts. I'm talking about the Wells Fargo's, Bank of America's, JP Morgan Chase, all those banks, right? They've grown stronger while BlackRock has weakened here. Not to say that their share prices aren't going down, but BlackRock's getting hit harder. So what gives here? What's going on? Well, I got to tell you guys something here, which is that if there's any conspiracy that's true at the end of the day, the last thing that the almighty powers that be, and I'm not talking about Larry Fink. Larry Fink has some influence on the world, but you want to know who has much more influence? I can simply show it to you right here, guys. If you want to bet on a conspiracy, it's these guys here. Elon, Bernard Arnault and family, Jeff Bezos, Larry Ellison, Larry Page, Warren Buffett, Mark Zuckerberg, Sergey Brin, Bill Gates, Steve Ballmer. I could go on the list of Forbes. It's a public open source for net worth. And I got to tell you guys, where do they get their wealth from? They get their wealth from their owned equity in various technology companies. The Magnificent Seven, Tesla, Microsoft, Apple, Meta, Amazon, you name it. Go down the list, Google, all of these big tech plays. And what do you think is the last thing that they want here? The last thing they want is a Bitcoin ETF. The last thing they would want is capital inflows going into Bitcoin rather than the big technology stocks that have continued to pay great returns over the past few years. Especially while they are struggling to maintain that balance between supply and demand of available shares on the market, when the prices of those equities are starting to correct. Now, I gotta be honest with you guys, I don't really believe in this conspiracy here, but it's much more viable than BlackRock just controls all the world. BlackRock is a $100 billion company. Larry Fink, a few $1 billion to his name. That might sound like a lot. And sure, BlackRock has the ability to have some pretty direct influence on a lot of corporate boards for the people who represent those companies. But I gotta tell you guys, if Larry Fink oversteps, I promise you, BlackRock is not going to have that ability as a money manager, nor will State Street and Vanguard like they have over the past few years, unless they play nice. So just wanted to make that very clear here for those who constantly go off the baseless conspiracy that BlackRock will just get its way. It's not true. They do not have an ability to just convert any agency out there in the world to go their way, especially the SEC, which is a regulatory body, right? Or excuse me, an enforcement agency more specifically to enforce on regulations. Now, I want to go ahead and talk about what's more important here. Instead of going off of these conspiracies that play into our hopes that someone's going to buy our bags and drive up Bitcoin's price, I want to talk about the real things going on in this world. We are 607 days into the Ukraine and Russian conflict, this war that's been going on for well over a year, coming up nearly on a year and a half to 2 years. And there is no single sign of peace talks, of de-acceleration. There's continued stalemate here between Russia and Ukraine. And now, to add into the mix, We have continuously and more tense growing conflict between Israel and Palestine at the moment, following the terror attacks that happened. And unfortunately, Israel is retaliating even more aggressively here. And it is getting towards a point here where now we're starting to see the current administration talking about providing tens, if not actually, I think a total of $100 billion towards these geopolitical conflicts going on right now. And I'm not here to sit here and say that, oh, we should or should not provide funding to these countries. I'm not here to say I know exactly how these are going to turn out and how you should feel about these things. I'm here as someone who's tracking markets to let you know this is not helping. This is not helping the United States, which is already running record deficits and having to pay a higher cost on capital in order to fund those deficits because of a higher federal funds rate. And unfortunately here, at the end of the day, because we have continued to prolong the necessary increase in interest rates early on and the more dramatic reduction of the balance sheet, we've been in this uncertain period of time where more macro tensions can build up. The economy didn't go into its proper recession, and now we are paying the cost for it, a much higher price. We still have inflation in this economy well beyond 2%. We have a reinflation of many goods and services and energy-based commodities like oil and natural gas after the base effects were wiped out in the annualized inflation CPI. We have, again, elevated home prices. We have elevated energy prices in the economy. And on top of that, now we're starting to see that commodities like gold are re-accelerating here towards their highest level since back in May, completely circumventing those losses here, signaling that something is about to break. The US 30-year yield accelerated yet again today, towards a new high here, well beyond 5% and well beyond where it was back just about a little over 2 weeks ago here at around 4.6%. And I think we need to be vehemently honest with ourselves in asking the question whether or not this is going to be a period of time where Bitcoin is really going to shine. Is it going to be shining during an impending recession here in the next few months? We know, historically speaking, that this is a precursor towards a recession, and one in which is probably going to be incredibly dramatic, as we not only are so used towards the period of time of the sugar-coated, easy money of the last decade that led the last secular bull run to bringing some of the best returns both in stocks as well as cryptocurrencies, but we are also going to be returning back to the historical norm. We went towards an exacerbated low here where the yield curve was -1 between the US 10-year and US 2-year yield, the lowest level since back in the 80s. We don't even have it here on our recorded chart. It's been that long ago since we got this detached from financial markets. And we need to be prepared and stomach up and prepare our portfolios, whether that's being in cash, whether that's being in more defensive plays, than going all in into one particular asset. I don't feel like that's the best play. I'm not saying you can't have some Bitcoin, and I don't even want to sit here and say, as I've echoed before, that there isn't a chance that Bitcoin could have its moment to shine. That 10 to 20% chance that Stanley Druckenmiller properly quoted back well over a year ago that Bitcoin could do really well in this risk-off environment. But I gotta be honest with you guys, going all in on Bitcoin, let alone going all in on crypto and just dollar cost averaging and buying the dip and hodling, that's a fool's gambit here, guys. And unfortunately, it's going to tear up a lot of people as it has for the past few months and the past few years since this bear market started. This is not your traditional crypto bear market. We have got a lot going on in the macro sphere, and we've got to realize that Bitcoin does get impacted by this stuff. Potentially positively, but most likely negatively, as Bitcoin saw the vast majority of its appreciation during a period of time of easy money and money debasement, not inflation. That is a new element here, where we're having real heightened inflation that the Fed is still struggling to get under control. But I think it's going to get there here, is it's going to have to play catch up on tightening rates. And equities on this part. This is why, again, viewing things from a macro perspective is important. Equities are signaling to us that the bull market hope is going bye-bye. I mean, I got to tell you guys, this is not how a bull market traditionally starts. It doesn't look like it to me when I look back at history. I want you guys to, again, just like Take a look back here. This is the VTI, Total Stock Market ETF. This to me looks like a significant lower high here where we could not clear through the last few months of resistance, which were the prior relative highs here back in 2021 through 2022 that peaked out in the last bull market. We are now seeing a huge reversal here, more than a 10% drawdown already in the broader stock market. We can see volatility is spiking up higher to its highest level since March of 2023 and is deviated, officially confirming a near year-long or 9-month-long deviation trend here in the VIX. I want to signify how important this chart is, guys, because whereas a lot of people thought that we were done with the bear market, the breaking of the VIX here back in April, I have to be completely candid as someone who's bearish during that period of time. That's when I started to loosen up on my bearish tone on equities, because when volatility broke through that range, if you have lower volatility and a slow descending mediation of volatility, that is usually what happens in bull markets. It happened here for a large part since 2011 here towards 2017, before recessionary risks started to reaccelerate. But now that we have accelerated and given up all of those losses in the VIX, we need to expect that volatility is here to stay. And with increased volatility, we have increased uncertainty. The highest level since back in March of this year. And it doesn't look like it's ready to stop here, folks, because now that this has been confirmed as a deviation, we're likely coming up here towards 33. That is like my minimal target here at this range. Like, highly probable that we're going to come up and see this range here. And the question is, again, with volatility spiking so aggressively, is Bitcoin not going to be affected by it? There's a chance, but I think it's a slim one. I really think so, guys. When you have Tesla, again, like many other plays here in the equity markets, doing the opposite of volatility, deviating from their relative points of resistance, which they broke through, now collapsing back below those lines of resistance. Tesla's down 15% this week following its recent earnings report. And when you have deviations like this, the case is that usually you're coming down to the other line of support, right? When you deviated above resistance, you're coming down here. That's a long way down for Tesla. And I'm not even going to say it's going to go all the way down there, but we've got a sell-off coming here. We've got a PE contraction, a price to earnings multiple contraction for these big tech plays. Apple hasn't fully deviated yet, but man, the question is it going to hold on that line of support at 162? Is it going to be able to turn this prior line of prior resistance into support? I gotta be honest with you guys, Apple didn't reveal anything around AI in its last WWDC meeting. There's not much new and exciting with Apple's software and hardware. There's the Apple Vision Pro. You tell me whether or not you think a lot of people are going to be buying a $2,000 VR device going into a recession. I don't think so personally. Take a look at NVIDIA. Man, NVIDIA on the monthly time frame starting to give eerie signals after multiple green months in a row, having 2 red months here, looking a lot like December of 2021 when it set in its last high. On the weekly time frame, looks like a clear distribution pattern, head and shoulders here with no serious trend continuation. Not to mention the broader semiconductor sector sitting in a clear double top with its November 2021 highs here. Not good to see. And for the EV narrative, lithium miners looking to be the weakest point since back in back in the fall of 2020. 3 years of progress wiped out. So why am I telling you guys all this? Why am I going on this rant and rave here? My point here is that if you are looking to expose yourself to equities, be ready for some pain. If you are buying into altcoins, be ready for some pain. If you are going into Bitcoin at this price range, right at relative resistance, do not be surprised. I'm not going to say it can't come up here and say, oh, go to 32K and make another 10% move, right, up to 33K from where we are now. I'm not here to talk about what's going to happen today over the next week or so. My point here is that don't be disappointed if you get shot down and you face resistance here in this range buying into Bitcoin. Crypto's market right now is incredibly thin. There is not much liquidity out there. There's very little market making activity. And there are a lot of arguments out there that the market manipulation that could be playing out right now is due to the environment that we're in. There is not much traders. Look at the metrics you would find in a traditional bull market. I'm talking trade count. I'm talking about market order flow. I'm talking about all the things that really lead to long-term price appreciation and long-term acceleration that justifies labeling something a bull market, that gives you the actual kind of gains you expect in a bull market. A 100% move in about a year's time for Bitcoin with supposed hopes of an ETF tells me one of either two things. Either there's not an ETF coming, or the supposed demand we'd hoped for is not there. And I just hate to see you guys get chopped up there, guys. Trust me, there's a lot of people out there who will say, oh, Nick, you're going to miss this trade, you're going to miss the bull market. I've heard that a million times. And I'm going to be very direct in saying that strong investors, those who make outlasting returns that beat out the market, they don't get choked up over 50, 100% moves in the market. They don't care about, oh, I missed this opportunity, oh, this and that. They care about protecting their principal. And when I say principal, I'm talking about your portfolio, what you have built over the last few years. We've helped a ton of people make money here on this channel, and we sure as hell didn't lead them down the road of losing a lot of money, getting liquidated over trading the market, and unfortunately, like so many others, eventually losing their money because they went all in on their hopes and dreams of something happening in markets. Well, I got to tell you guys, those are the same types of things that markets will utilize against you to leave you losing everything if you are willing to put your chips on the table and make hopeful and optimistic moves in a risk-off environment. Patience is key here, guys, and I only say that here to be honest with you guys. You all know, if you're making it this far in the video, you guys know that I'm here for the right reasons. And I only speak so confidently here because there are too many people telling you the other opinion. It's what I see here, guys, when I analyze things. I've traded for, guys, coming up here on 12 years, I've been trading in financial markets. I started way back in 2011. I remember seeing Bitcoin trading for $3. And back then, I was Bitcoin's biggest skeptic back then. Nowadays, I'm a big fan of Bitcoin. I love Bitcoin and crypto. But I know when to put my chips on the table. I don't do it when there's geopolitical conflicts going on that continue to escalate, essentially loosening relations between some of the largest economic powers in the world and future potential conflicts that look like they're in play, like the one in Taiwan. And you've got inflation that's still persistent in the economy. I mean, this is not the environment I remember back in 2020, or the environment back in 2017, or the environment back in say 2016, 2015, some of those years where I really started getting into trading. This is different. This is going to be the first real recessionary bear market I've ever traded in, and I'm sure it's probably one of the first that many of you have traded in. There's no humility in saying that. I think, if anything, it showcases that we're prepared to experience something that many haven't even considered, and many people have started to take off the table with hopes of a soft landing rather than a real significant recession. We lean into the latter of the two. And you guys know where to find the voices who stand on the other side of the camp. I respect people for having differences of opinion. I don't mean to stand on some ivory tower or claim that we have some opinion that you should follow 100%, but I want you to take what we present here like any other opinion with a grain of salt and do your own analysis. Think for yourself. Don't follow into someone who says you have to trade or you have to do this. Notice how we're not doing that here in this video. You can dollar cost average into some Bitcoin, have some percentage exposure, but if you're really looking to hedge against inflation, or you're more importantly looking to hedge in that worst case scenario where everything collapses, you can have 5 or 10% exposure to Bitcoin. I would never berate someone for doing that. What I will berate is people going all in and telling other people by I mean to go 100% all in on Bitcoin. That's where I have my problem, let alone going all in on leverage long in Bitcoin at relative resistance. I mean, you can take that risk, but it's not going to be me. I love you guys very much. If you made it this far into this video, know that there's no hard feelings, because I'm just telling you my opinion here, what I see in the market. If you loved this rambling here, if this is what you eat up, if you made it this far, then I hope you guys will give me a like on the video and share it with a family member or friend member who's in the same situation you are, who's wondering about what's going on in the macro scene right now, who's wondering whether or not Bitcoin's got the steam to really continue higher. And outside of that, if you guys are interested in supporting us here on this channel, if you like this kind of content, this focus on the macro perspective, then consider joining the Dash Report at the link down below in the description. You can get 20% off on our newsletter, our monthly newsletter. We send out a 20-page plus report going over everything from crypto, stocks, commodities, and Forex. And this month, I'm hoping to spend a lot of time on talking about preparing for the next few months here. What plays we're looking to get allocated to, and just talking about generally what we feel is going on behind the scenes at the moment. There is a lot to be focused on right now. And if you're just looking at altcoin charts, if you're just looking at Bitcoin, if you're just looking at, your favorite TA analyst who's talking about, oh, this support level or this indicator, you're gonna miss the big picture. We got to focus in the same way on financial markets as the big money is focusing on. The big money is not ignoring what's going on in the world right now. They're keenly focused on it, and they're accordingly rebalancing their portfolios and wealth towards those macro events. So if you guys are interested, again, check out the link down below in the description. But above all, if you can drop a like on this video, it's a great way to support the channel. Thank you guys so much for tuning in as always, and I'll see you guys in the next video on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone.